Hey everybody, so as a seasoned real estate investor, I have certainly come to appreciate the importance of these two metrics in evaluating the profitability of an investment property. So in this video, what we're going to do is dive into the differences between ROI and cash-on-cash returns. And I want to discuss when each metric should be used to make an informed investment decision. So make sure you stick around to the end. All right, so welcome to the VIP Financial Education YouTube video where we help you go further, faster financially. I'm sitting outside here today in beautiful Colorado. In today's video, I want to discuss the two important terms in real estate investing: return on investment, also known as ROI, and cash-on-cash return. These are the two terms that get tossed around a lot, and as a result, they're frequently misused by beginners, intermediates, and advanced real estate investors. I wouldn't be surprised if I've been guilty of doing this myself, as the terms are certainly related, but very different in their proper use and application. So that said, let's go ahead and begin by defining these terms, and then we'll jump into their differences and why they're two of the most important terms in real estate investing. Let's start by defining ROI. ROI, or return on investment, is actually the measure of the profit or loss that's made on an investment relative to the amount of money that was invested. That's the total amount of money. In real estate, ROI is calculated by dividing the net profit, that's the profit after all expenses and taxes are paid, by the total amount of money that was invested. For example, if you bought a rental property for, say, $100,000 and your net profit after all of your expenses and taxes is $10,000 per year, your ROI would be 10%. Now let's talk about cash-on-cash return. Cash-on-cash is a measure of the return on cash invested into the property. In other words, it's the percentage of cash that you receive each year compared to the amount of money that you have invested into the property. For example, if you invest, say, $20,000 into a rental property and then you receive $2,000 in cash flow after expenses each year, your cash-on-cash return would be 10%. So what's the difference here? Because it sounds like they're very similar. While both measures are used to evaluate the performance of real estate investments and so forth, the main difference really lies in how they are calculated. ROI takes into account the entire amount of money invested, including any financing or leverage that was used to purchase the property, while cash-on-cash return really only takes into account the actual money that somebody put into the deal. In addition, return on investment considers the long-term potential appreciation of the property, while cash-on-cash return focuses on the short-term cash flow that is generated by the investment. So it's important for real estate investors to understand these terms because they provide valuable information about the profitability of an investment, and by comparing the ROI and cash-on-cash return of different properties, investors are able to make informed decisions about which investment will provide the best return for their money. The decision of whether to prioritize ROI or cash-on-cash returns depends on the investor's individual investment goals and also their strategies. Now, if an investor is primarily focused on long-term appreciation and is willing to wait several years to see a return on their investment, then they may prioritize ROI because this is, taking into consideration and account the potential future value of the property, which may not be realized for several years down the road. In this case, the investor is more concerned with the overall profitability of the investment rather than the immediate cash flow. On the other hand, if an investor is looking to make immediate cash flow and they want to see a return on their investment right away, they may prioritize cash-on-cash returns instead. And this is because cash-on-cash returns only take into account the actual cash invested into the property and the short-term cash flow generated by the investment. In this case, the investor is more concerned with generating income in the present. I do want to point out it's also worth noting that different types of real estate investments may lend themselves better to one measure over the other. For example, a traditional fix and flip property may prioritize ROI since the investor is looking to make a profit on the eventual sale of that property, while a rental property may prioritize cash-on-cash returns since the investor is looking to generate income from the monthly rental earnings, the rent payments from the tenants. Now, ultimately, the decision of whether to prioritize ROI or cash-on-cash will depend on the investor, their individual goals, and their strategies. So it's important for real estate investors to understand both measures and use them together to make informed decisions about their investments. So now that we've got the basic understanding of ROI and cash on cash returns, let's dive into some of the most important factors that you should consider when prioritizing one over the other. Let's start with ROI. First and foremost, location is critical when it comes to real estate investing. The right location can have a huge impact on your ROI. So it's important to carefully research and then select properties that are in areas with strong economic fundamentals as well as growing demand. This is always true with real estate, and it becomes even more true when the housing market looks like it does right now. Secondly, it's important to consider the potential for future appreciation as well. And that means investing in areas that are poised for growth and development, such as new neighborhoods that have newer infrastructure or projects that are in areas that are experiencing demographic shifts. Undervalued properties are going to be crucial here. And we just so happened to do a video on that exact same topic not too long ago. Make sure you check that one out via the link in the description as well. I'll put that in there for you for easy access. Now, the third is that it's very important to consider the property's condition and potentially any necessary repairs or upgrades that might be needed in order to increase its value. And that might include renovating the property to add additional bedrooms, bathrooms, maybe updating the kitchen and bathrooms with more modern finishes. Next, it's going to be important to consider the financing terms and interest rates that would apply when purchasing a property, whether you're primary or an investment. And choosing the right financing options and negotiating favorable terms can help increase your ROI. And that's because obviously it reduces your expenses and it increases your cash flow. Now, when prioritizing ROI, it's going to be extremely important to consider the local rental market and the demand for the property. So researching the local rental market and demand for similar properties in the area can really help you determine whether that property will generate sufficient rental income in order to achieve your desired return on investment. Last on my list here is that it's going to be important to have a solid investment strategy and have a plan in place. And that includes setting clear investment goals, make sure you identify your target market and property types, and then develop a plan for managing and maintaining those properties over the long term. ROI is more about long term when it comes to real estate investing. So being as clear in your planning as possible will go a very long way in securing the best return on your investment. Now let's go ahead and take a look at the most important factors to consider when investing in real estate in order to prioritize the highest possible cash on cash returns. To start, it's going to be important for you to focus on properties that have strong cash flow potential. And that means investing in properties that are already generating income or have the potential to do so through rental income or other sources of cash flow. The short-term rental market is a perfect example of this. We do talk often about short-term rentals. Make sure that you check those videos out. I don't want to bog this video down with details on that real estate strategy. So instead, what I'm going to do is direct you to check out the playlist. I'm going to link that in the description for you again too. But the next thing to consider here for cash on cash prioritization is the property's purchase price. And that includes financing, the market conditions, etc. These are all a repeat from the considerations for optimal ROI. So again, I'm not going to go into too much detail on that, but the lower the purchase price and associated expenses, the higher for the potential cash on cash return. I think that probably goes without saying. Now, this is especially true when you choose the right market. That's pretty obvious. But for the highest cash on cash return, it's also going to be very important to consider the property's operating expenses, like the management, which include fees. You're going to have to obviously pay taxes, the insurance, any maintenance costs, and so forth. Minimizing your operating expenses can help to increase your cash flow and of course boost your cash on cash return. So these come into play in a big way when utilizing a short-term rental investment strategy. So again, please check out the description below for videos diving into that specific topic. I'm actually sitting at one of my vacation rentals here with this amazing view directly in front of me, which you see in the reflection behind me. But you do want to pay more attention when making your real estate investment decisions, ROI or cash on cash returns. Look, What do you do in order to determine the best returns for you? I'd love to see this in the comments below. What are we missing in this video? I'm sure there are a couple of items that you guys are considering in order to maximize your ROIs. I'm always looking for the maximum efficiency with my money too, and also including the least amount of risk I can possibly find. I don't want to increase risk just because I see bigger upside potential. But this property has been a huge example of everything we've discussed here on this video today. It's in a perfect location. The market conditions were fabulous. Obviously, you can see here, a little bit breezy today, but we've got tremendous views of the Collegiate Peaks here in Colorado. And this property actually sat on the market for 2 full years before I purchased it. And it's primarily because right behind this berm here, you'll see that there's actually a mining facility. It's a large quarry. They mine for gravel, and it's one of the largest, if not the largest, supplier of various products, landscaping products, concrete, and so forth in this area. And people didn't want to be next to the quarry. I came in having a lot of experience in living in downtown cities and said, I don't really mind the dust and the noise for a short period of time. And I had insider knowledge from the homeowner directly that quarry's permit was about to expire. And upon the expiration, they had a 5-year reclamation timeline where they have to now either fill that quarry with dirt or it will be filled with water. So I'm going to end up with the only waterfront property next to that body of water. I don't want to call it a lake because it's really more of a small reservoir. And that will happen within the next few years. So the property values have nearly doubled since purchasing this property in 2019. The proximity to downtown in this area is a 15-minute walk. It's easy for me to list this as a short-term rental and still get to enjoy it for a good percentage of the year. The property pulls in about $90,000 per year, of which I still have some expenses on top of that, like cleaning fees. That's about $10,000. I'm always updating the amenities and including new entertainment factors and making it just the most fun experience for guests that I can. So there are a lot of additional factors that I'm considering on my return for the investments that I've put in on this property, but it has been one of the best real estate properties I've purchased because I was looking at all of the details that we covered in this video today. Hope this helps you out, guys. Be sure to subscribe to the channel. Drop a like if you don't mind. It helps us a great deal in the algorithm that's kind of bullying us around lately. And also be sure to check out the videos in the description below. We'll include those links to the playlists. And hopefully you guys are growing your cash flow machine as I am here. So stay tuned to the channel for more great discussions on how to continue to take your finances to the next level and go further, faster financially. Make it a great day today. And most importantly, keep on cash flowing. Take care.